is brought to you by realestate.com.au, Australia's #1 address in property. With more properties for sale than anywhere else, we make it easier.
Welcome back. Let's take a look at the auction rates over the weekend. Nationally, there were 1,218 auctions with a clearance rate of 61.9%. In Sydney, there were 445 auctions with a clearance rate of 60.4%. In Melbourne, there were 429 auctions with a clearance rate of 67.8%. In Brisbane, there were 61 auctions with a clearance rate of 60.7%. Adelaide, there were 46 auctions with a clearance rate of 80.4%. In Canberra, there were 45 auctions with a clearance rate of 80%. For more on property, I'm now joined on the set by Angus from REA Group. Angus, conditions still seem pretty good at the moment. Clearance rates above around that 62% level.
Yeah, that's right, Ed. We're still seeing pretty good conditions. It's not quite as good as we were seeing in autumn. We were seeing pretty strong clearance rates through a lot of autumn, and things do look to have cooled off a little bit as we've headed into winter, but it's still much better than what we were seeing late last year when we were seeing those big interest rate increases from the RBA.
And we've seen regular price increases month on month as well for the past 6 months or so, right?
Yeah, that's exactly right. Nationally, we've seen prices increase for the last 6 months. They're not increasing quickly, certainly not at the sort of pace we were seeing in 2021, but it's a big change from last year when prices were falling and falling fairly quickly in some parts, particularly in Sydney. And Sydney's really turned around, and nationally we might not be seeing big price increases at the moment, but Sydney's seeing pretty solid growth. It's up 4.5% this year, which, again, it's not what we were seeing in 2021, but it's still pretty good.
Do you think vendors are starting to then feel a bit more confident as the year goes on?
I think there's probably some of that. I think buyers are also feeling a bit more confident than they were, say, 12 months ago. And in part, that's just because we're not seeing as quick a change in interest rates as we were. It's hard to remember now, but last year, we were seeing 50 basis point increases every month. If you're a buyer, you went and got a pre-approval in July. By September, the bank was completely changed their mind on how much they were willing to lend you. That just made the buying process very difficult for a buyer in a way that we're probably not seeing as much at the moment. I think buyers know a bit more about what their mortgage is going to cost, how much they can afford to spend, and that's helping a bit.
We've talked a lot about rents going up significantly, but is that actually doing something with enticing investors back into the property market? They can get better returns now than they could previously.
Yeah, certainly it's going to be an important part of how we get out of the problems we're seeing in the rental market. We will ultimately need more investors to improve supply. The short answer is we probably are. Obviously, we've seen a big increase in interest rates. That's pulled back property activity broadly, and investors are no exception to that. We are seeing fewer mortgages to investors than we were, say, late 2021. But as a share of housing market activity, investors have picked up. So, again, using mortgage data, during the pandemic, fewer than 1 in 4 mortgages was going to an investor, which is very low, historically low. At the moment, it's back around 1 in 3, which is more like historic average. So it's kind of more consistent with what we're seeing. And importantly, we're also not seeing as many investors selling out as we were during the pandemic. A lot of them exited the market during the pandemic when rental markets were quite soft. That doesn't seem to be happening as much today.
And what are some of the trends you're seeing in the lending indicators numbers in regards to investors as a share of housing credit?
Yeah, so we have seen that pick up compared to what it was in 2020. So in 2020, fewer than 1 in 4 mortgages was going to an investor. It was pretty low, as low as we've seen on the data, which goes back 20, 30 years. Today, it has picked up. Now, it doesn't capture everything. Not every housing transaction has a mortgage attached. So, we don't see every single purchase, but it's about 1 in 3 at the moment. That's a bit closer to historical averages.
Long term, I guess the way to solve the rental crisis is to build more. And we have had some pretty good buildings approvals numbers in the last few weeks. I think particularly New South Wales, just a massive amount of apartments was recently approved for construction. So things like that will clearly eventually help.
Yeah, that's exactly right. We saw pretty strong numbers for units in New South Wales, though that is against a broader trend of declining approvals broadly, and particularly we're seeing that in other states as well. Units can be very volatile too, just because you think about a large project coming through in 1 month, or 2 projects coming through in a month will make a material difference to the number of approved apartments, given that apartment blocks can be very large. So while that's good news, it is still against a trend of declining activity, and the reason for that largely is higher interest rates. We have seen building activity pull back new building activity pull back as interest rates have increased. We know it is the most interest-sensitive part of economic activity, so that's not a big surprise. And it has been really hard to construct homes over the last couple of years. We've kind of fallen behind where we would expect to be based on approvals and how many got started work. We haven't finished a lot of them as yet.
Do you think the slowly falling rate of inflation is starting to help a bit for the construction sector?
I think we're through the worst of it for the construction sector. If we look at the growth in building costs and material costs, that, like inflation, is starting to come off. It's still running pretty hot. Building costs are up 15% over the past year, but that's better than the 20% we were looking at last year. So it's still tough, but it is starting to get better, a bit like inflation. And I think we'll hope to see that resolve over this year as supply chains improve.
Angus Moore, thanks so much for your time.
Pleasure, Ed. Thanks for having me.